So today we're going to do a little Homebuyer 101. We're going to talk about once you're pre-approved, information you need to share with your lender so that your pre-approval is valid, right? Because what happens a lot is people say to me like, oh, well, now I'm pre-approved for 400, right? Yeah, we've got you pre-approved for 400. However, here's a couple things that can change your pre-approval. And I always go over this, but there is a good chance you might be working with a lender that just gives you a pre-approval and doesn't cover this stuff, and then it can really bite you. So for instance, if I'm qualifying someone and I think it's a single family, I usually ask, I go, are you looking at single families or condos? And they'll be like, single family. Okay. A single family pre-approval is very different than a condo pre-approval. And you're like, why? HOAs. Yes, condos have HOA dues, which make it so that the monthly cost is higher. So if I'm looking at your debt to income, a house at $400,000 is very different than a condo at $400,000, right? Because the house, I've got my property taxes, I've got my insurance. Condo, I've got my property taxes, I've got my insurance, and I have that HOA. Now, depending on where you are in the country, it can be anywhere from $85 a month to $1,000 a month with HOA fees. So that can impact your pre-approval in a very big way. Because if I pre-approve you for a $400,000 single family with no HOAs, and this is the max you can go to, and then all of a sudden you're in contract on a condo with $400 HOAs, guess what? You don't qualify. Nope. Because your debt to income has changed. And I have other videos on how to calculate your debt to income. If you're looking at both, you really want to have these open conversations with your lenders. When I have clients looking at condos, I literally tell them, before you write any offer, you have to call me if it is a nickel over this, because with the way the debt to income works, there's so many factors. So how much is the condo versus how much is the HOA? Sometimes you can have a more expensive condo if the HOAs are lower, or if the HOAs are higher, you need a less expensive condo. We're constantly balancing it out so that your debt to income stays in range, okay? Another important difference is single family home versus a manufactured home. Interest rates on those are different. It's that simple. They're different. There's different lending guidelines on certain products. So once again, if you're qualified for a single family and you start looking at a manufactured, that can affect your ability to qualify. So you definitely want to talk to your lender. Now, something else that I can see affect pre-approvals, and I get more of it probably because I'm licensed in 46 states. So I work with a lot of retired people. I work with a lot of people who don't have to go into their office, who can work remotely, and I'm always like, guys, if you go to a different state, you need to tell me, a pre-approval in Sonoma County, California is very different than a pre-approval in New York, right? In Manhattan, it's very different. We're looking at different property taxes, different insurance, and my goodness, insurance. Like, think about the insurance differences. You've got hurricanes in Florida, right? Fires in California, and most of the West Coast, really. And then, what's the other one? You've got tornadoes in other parts of the country. So like, let's say I qualify you for a state that doesn't have a lot of natural disasters, and then you end up in a natural disaster state. Once again, if that insurance is more than I was estimating, it can affect your debt to income, which can affect your qualification. So if you start looking in another state, you need to talk to your lender. Also, it's very unusual for most lenders are not licensed in this many states. The people who are licensed in as many states as I am are banks, right? Lenders who work at banks, because the bank has it where just anyone who's under them can do anything. Like, I'm a little jealous of that. But for the type of lender I am, I'm a retail loan originator. Generally, they'll only do one state. Some brokers only do one state. So you want to make sure if you're looking at multiple states, you talk to your lender. We have clients where we're like, okay, I need, what's your preferred county in each state? Here's what you can do. Okay. And the reason is also beyond just insurance, like what's the natural disasters, what's the insurance cost? You also have property taxes. Yeah, like property taxes in Texas versus property taxes in Hawaii. Oh my goodness. Oh my goodness. Hawaii, I have to say their property taxes are so magically low. Every time I get a Hawaii loan, I like dream. I'm like, one day, I'm wearing my Hawaii dress. I'll be there soon. Because the property taxes are low. And then sometimes we're looking at our Texas loans and we're like, ooh, you gotta prep for this because it can be 2 or 3% annually, which is brutal. And parts of Illinois, oh my goodness, 8, 9%. Like, it can be wild across the country. So assuming, let's say you live in California, and this happens a lot because some people would say there's an exodus of Californians. I don't really believe that. We still have multiple offers on everything. It's still hard to find houses, but there are people leaving California and they may be used to our property taxes, which are between 1 and 1.25 unless you're dealing with new construction. That's a different ball. So they go to these other states, and Texas is a great example, and they'll be like, wait, what? And I'm like, yeah, the property taxes are way more in Texas. So you have to prepare for this. So getting a pre-approval and then switching state, you need to let your lender know. You also need to let your lender know if you're switching county. I don't know if you can hear my dog. She thinks she's a pit bull. If you're switching county, it can change the taxes as well. There's certain states where just that county difference can be a 1% difference annually. So there's a tool, it's called Smart Asset, that I use. It gives a good ballpark for every single county. I suggest you guys, check it out, because if you're looking at a couple different counties, knowing what the property tax ballpark is could help you make your decision. Some people, especially people who are retired, they don't want to get locked into high taxes. I'm not retiring any soon, but I can tell you right now, I don't want to get locked into high property taxes. You kind of have to look at it and know what you're getting into. So making an assumption that all property taxes are the same, no. Okay, so just to do a quick recap, you need to check in with your lender about the type of property that you're looking at. Just because you're pre-approved for XYZ amount doesn't mean it's going to work on those other property types. So you want to make sure you have an open discussion with your lender. Number 2, you need to talk to your lender if you start switching states. Yes, because there's different insurance at play and there's also different property taxes. And third, even if you're not switching states, you need to talk to your lender about property taxes in different counties if you're looking at different counties. So these are very important things to take into consideration when you're buying, and to have an open and honest conversation with your lender. Because we never want to be the people where you give us a contract and then we call and we're like, we qualified you with no HOA. When did you start looking at condos? We had talked about single families. I do that and I hate that call because it's always horrible. We don't want a dream crush. We want to be your partners in helping you guys find a house. So open, honest communication is always best. Talk to us about everything. I would rather you tell me everything than you tell me nothing. So once again, I'm licensed in 46 states. I love doing loans. I have an amazing team of people who are so passionate about clients and education. We're really all here to make it as easy as possible for you. So thank you for watching, and I look forward to seeing you soon.